Hello and welcome to India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. President Trump lashes out at Israel and Iran in a bid to save the fragile ceasefire, blames both nations for violating the truce. Israel claims its warplane struck a radar installation near Tehran and turned back after Trump's warning. Crude oil prices trim losses after claims of ceasefire violation by Iran, but oil prices still down over 10%, moving back to levels seen before the latest flare-up in the Middle East. Stock markets rebound across the world. Dalal Street's rally loses steam in the last hour. The Sensex and the Nifty end with minor gains coming off their intraday highs. India is keen but not desperate to sign the US trade deal before the 9th of July tariff deadline. Sources say negotiations are stuck on agri, dairy and genetically modified crops. Finance Minister Nirmala Sitharaman says a deal with the US is close, adding that India's effective tariff rate is far lower than what is being perceived. India keeps Chinese automobile makers out of the new scheme to promote electric car manufacturing. The government invites other global car makers to apply for incentives to make in India within 4 months.
It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector.
The telecom sector needs more competition, says Union Minister Jyotiraditya Scindia. The statement comes at a time when Vodafone Idea is seeking relief from the government on outstanding dues worth over 80,000 crore rupees. The Navi Mumbai airport run by Adani will charge a user development fee of 620 rupees for domestic passengers. This is 3 times higher compared to the fee at the Mumbai airport. International passengers will pay 1,225 rupees, which is 2 times more than the Mumbai airport. Train travel is set to get more expensive. Sources say passenger fares set to hike across the board from the 1st of July. A formal order is expected this week. Pharma major Novo Nordisk launches its weight loss drug Wegovy in India. Prices start at more than 17,000 rupees for a 1-month course. Software major Salesforce unveils a significant update to its AI agent platform, promises more visibility and control for businesses who rely on AI-driven automation. Well, the big story tonight, US President Trump lashing out at both Israel and Iran, accusing both countries of violating the ceasefire agreement. Now, in a stern statement, Trump used an expletive and warned both nations. President Trump told Israel not to drop any bombs on Iran, saying, and I quote, "Bring your pilots home now," end of quote. The Israeli Air Force says their air war plane struck a radar installation near Tehran and turned back after President Trump's warning. Missile sirens were heard in Tel Aviv and parts of Israel. A few hours ago, Israel's defense minister accused Tehran of launching new missiles in violation of the ceasefire. Iran has denied Israel's claims. According to Reuters, Iranian officials denied firing any missiles at Israel. Hopes that the ceasefire will hold have sparked a sharp drop in oil prices and a relief rally across global stock markets. Trump's announcement of an end to the 12-day war came after Iran retaliated against U.S. strikes on its nuclear sites by attempting to attack a U.S. military base in Qatar, but nothing was struck. Iran's missiles were intercepted over the skies of Doha, and U.S. officials reported no casualties. Here's President Trump issuing a warning to both Israel and Iran.
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I'd never seen before. The biggest load that we've seen. I'm not happy with Israel. Basically have 2 countries that have been fighting so long and so hard that they don't know what the they're doing. Do you understand that?
Well, that's President Trump. Crude oil prices down after Trump's warning. And oil prices now at levels seen before the latest flare-up in the Middle East. Manisha is standing by with more. Manisha, it's a 10% drop there as far as crude is concerned. And here we were talking about the possibility of an escalation. Brokerages were talking about $100 plus. And look where we are today.
Well, thank you for that. I'll start with the price action first, where we saw 7% of a decline in the overnight market. And then Asia, Europe today also saw yet another 3 to 4% of a crack coming in for the prices. So with this now, we are down by 14% from yesterday's highs. And also we are trading right at 2-week lows at the level where we were before the Israel-Iran conflict started there. I want to take you through 5 pointers on what has really led to a decline for crude prices. One, it clearly has been the US president announcing a ceasefire between Israel and Iran. while we still see those statements coming in on perhaps a violation here and there. But the point being that a lot has been said, and we have seen prices go in for that correction there. The second is about Iran's retaliatory strike on Qatar's US airbase. But we do understand that there were no casualties and the damage was minimal. So the market's really not counting that in. The third point is that the most critical Strait of Hormuz as of now will not be closed. That clearly was an extreme action that the street was looking at. With that also out of the way, at least for now, we're looking that also coming off in sense of premium in prices. The fourth point is about OPEC and allies, which have yet again reiterated that they are looking to increase production all the way until the month of November. And within all of this conflict, there comes my fifth point, and this one comes in from IEA, which said that they're holding 1.2 billion barrels of crude as an emergency fund and can deploy it into the markets if need be. So all of this really assured the market and is the reason you've seen that premium come off from the crude prices.
Manisha, many thanks. And moving on to the stock markets, they did stage a rebound across the world, but gains were limited in India. The Sensex and the Nifty closed marginally in the green, but we saw the rally lose steam in the last hour. So the Sensex fell 900 points from the intraday high, finally closing 158 points higher. The Nifty 72 points higher. The mid-cap index did better, up by about 415 points today. So coming off the highs. That's the story for our markets. And Surabhi is standing by now. Surabhi, we lost steam in the last hour, but nevertheless, relief rally across the world.
Well, a day that will be described as disappointing, given what a solid global backdrop we started with that ceasefire being announced and global markets absolutely raging and ripping higher. But what started off as a 250-point gain finally fizzled out. The Nifty did manage a little bit of green, but just could not hold on to the morning momentum at all. Relatively speaking, mid-caps were better. The mid-cap index at least had a gain of almost 0.7%. The advance decline ratio was also positive. More than 2 stocks advancing for every one that was declining. So that was a silver lining. But the fact is that the index, the Nifty itself, is unable to punch through the recent trading range. The top of that range comes in around 25,200. And that's now turning into a bit of a resistance because the market is not able to take it out on the way up. Let's talk about the gainers then. On the Nifty, Jio Finance, Adani Ports, Shriram Finance, Grasim, Tata Steel. These were stocks on the way up. The banking part of the market actually did much better. Bank Nifty was outperforming the Nifty, and you had gainers in the form of Kotak Mahindra Bank, SBI, HDFC Bank. On the losing side, ONGC, Power Grid, ONGC for obvious reason because of the collapse in oil prices overnight. Trent lost some ground, NTPC was lower, and giants like Lever and Reliance, they did not really fight for the bulls today. They were flat to slightly negative. Let's talk about IT. Now, this is where things turn. IT stocks opened the morning with a flourish, but by the time we closed out, they were all either flat or slightly negative. Names like Tech Mahindra, Infosys, all of the, the fuzz or the fizz really fizzling out, I should say. Now let's come to mid-caps. That was a silver lining today. The gainers included names like GE, Vernova, T&D, Kajaria Ceramics, Smart, 5-6% move coming in towards the close. Some of the financial names like JM Finance, Edelweiss up 4-5% as well. And the rice makers, LT Food and KRBL, were up and about as well. Remember, some of the Middle East markets are very big exporting markets for these rice companies. KPIT Tech has issued a mid-quarter warning of sorts, basically putting out a mid-quarter update, highlighting some business concerns. That's why that stock was down about 5%. And finally, on the flip side, defense stocks today came in for some profit taking. So names like HAL, BEL, BEML, particularly BEML, was down about 7%. But even private sector names like Data Patterns and Zentech on the lower side. So okay day for mid-caps, slightly disappointing for large caps. And we'll see once the geopolitical headlines settle, then the market will go back to taking a closer look at trade and in particular that India-US bilateral trade agreement.
Well, Surabhi, many thanks. And that's exactly the story that we're going to. India is keen but not desperate to sign the US trade deal before the 9th of July. That's the tariff deadline. Sources tell us that negotiations are stuck on agri, dairy and genetically modified crops. Abhimanyu is standing by to take us through where the stalemate is. Abhimanyu, agri, dairy, genetically modified crops, that is the stumbling block, or so it seems.
Negotiations between India and the United States are still underway as both the sides are still keen on signing an interim trade deal before the 9th of July but are not desperate. That's the broad message so far from the ongoing deliberations. A government official has told CNBC TV 18 that the India-US trade deal is currently stuck due to issues pertaining to access for agri and dairy products and GM crops, while the United States is insistent on lower duties for agri and dairy produce and a broad access for the GM crops in the Indian market. India is unwilling to allow so. The government official further said that there will not be any compromise on India's national interests, adding that tariffs may revert to 2nd April levels if a deal is not reached by the 9th of July. Government sources have also said that earlier tariffs may also imply a competitive advantage for India vis-a-vis its competitors which export to the United States.
All right, Abhimanyu, many thanks for joining us. And staying with the US-India trade deal, Finance Minister Nirmala Sitharaman says India is close to signing a trade deal with the US and the EU. Speaking at an event organised by the Exim Bank, the Finance Minister said India's effective tariff rate is not as high as it is being perceived. Take a look.
For all of us, or those of us who still believe in the commentary which was made in the US, that India may be the tariff king. No, I want two things to be remembered. Given our system of things, we seek parliamentary approval for deciding on the tariff rate. You obtain from the parliament the permission to go up to a certain level. But effectively, you are at a far lower level. 7 tariff rates have been removed in this budget, reducing the total to just 8.
Well, that's the Finance Minister saying we are not the tariff king, something that President Trump has been going on about. Now, the government has invited global car makers, except those from China, to apply for incentives to make in India. The applications have been invited over the next 4 months. Government officials have said that 4 to 5 companies have shown interest. Parikshit is standing by with more details on the new EV manufacturing scheme. So, Parikshit, it looks like the likes of BYD, who were hoping to make in India, will not be able to do so.
In fact, the government has started sending invitations to all nations through their embassies, telling them that if there are companies in your countries who want to apply, please ask them to do so. Please sensitize them about the scheme. They've sent letters to all global OEMs, including Tesla. But on the question of China, the government is very clear that China shares a land border with India, and there the Press Note 3 is very clear. Press Note 3 in 2020 had said that no investments from land border countries, including China, can happen through the automatic route. It has to mandatorily go through government approval. And we've seen since 2020 that very few approvals for Chinese investments have gone through. And it's on a case-by-case basis. The government is very clear that they will not allow Chinese investments automatically. Now, let's look at BYD for that matter. BYD has been proposing to set up a plant in Telangana at a cost of 85,000 crores. That cannot happen without the approval of the government. Look at MG Motor. MG Motor had applied for the PLI scheme a few years ago, but that application is pending with the government. Their FDI application has been pending with the government and has not been cleared either. Considering the kind of stand the government has taken with these Chinese car makers in the past, it is unlikely that any Chinese car maker is going to be allowed through this scheme. Now, what is going to happen? Well, any car maker who applies, they have to do so now within 4 months, and after that in October, the window closes down. They will have to give a commitment of 4,150 crores, and they will have to commit to start manufacturing in India in 5 years. Until then, till they start manufacturing, they'll be allowed to get 8,000 cars from abroad, electric cars into India, fully built cars at a reduced duty of 15% as opposed to 100% currently. So the government believes this is going to be a win-win, and somehow they believe that this will still be attractive to OEMs after the FTA concessions in the auto sector.
All right, Parikshit, many thanks for joining us. And the government is expected to finalise a rare earth magnet manufacturing scheme within the next 10 to 15 days. This comes after China curbed the export of these magnets, which are critical for EV manufacturing. Sources say the new initiative will have an outlay of 1,000 crore rupees and support capacity of 1,500 tons of rare earth magnets. China has relaxed the import curbs for the US and European car makers, but no word yet on export requests placed by India's EV makers. The Secretary at the Heavy Industries Ministry, Kamran Rizvi, Scindia said India is in talks to import rare earth minerals from Japan and Vietnam. Take a look.
Are we looking at any other countries where we can source the, I don't know, except China?
So you are aware that rare earth is available in Japan, in Vietnam, and efforts are going on to bring from there.
Well, that's the latest as far as the rare earth magnet issue is concerned. Operations at Hyundai's Chennai plant remain unaffected despite ongoing wage negotiations with its workforce. Sources tell CNBC TV 18 the South Korean car maker is likely to reach an agreement with its recognized trade union on a long-term wage settlement soon. Telecom Minister Jyotiraditya Scindia has called for more competition in India's telecom sector. Speaking at an event today, Scindia said the sector cannot afford a duopoly and there must be competition across all segments. The statement comes at a time when Vodafone Idea is seeking relief from the government on outstanding dues worth over 80,000 crore rupees. The minister also urged device and chip makers and original equipment manufacturers to help produce network and user devices at affordable cost to prevent a new digital divide. Take a look.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough, we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
More competition, says Scindia. Vodafone Idea, meanwhile, has issued a statement today saying it has not received any communication from the government on the AGR dues by way of the government providing any relief yet. Now, the deadline to submit bids for bankrupt Jay Prakash Associates ends today. There are 25 suitors, including Adani Group, Dalmia Cement, Jindal, Oberoi, Patanjali. The company's total outstanding loans from banks and financial institutions stands at over 57,000 crore rupees. Digital payment major PhonePe plans to raise $1.5 billion and is eyeing a valuation of up to $15 billion. Sources tell us the company has hired a slate of top global and domestic banks to manage the issue. The lead managers for the offering include Kotak Mahindra Capital and JP Morgan Chase. The proceeds will be used to scale up financial services, invest in new verticals and pursue strategic acquisitions. Well, we now have a decision that's come in as far as the Navi Mumbai airport is concerned, where the user development fee has been hiked. Madiha joins us now to explain to us why airports charge the user development fee and how it varies across different airports across the country. Madiha, take us through what's been announced by the Navi Mumbai airport and how that stacks up with airports across the country.
Well, user development fee or UDF is a charge that is added to your air ticket by the airport operator. Higher the UDF, higher will be your airfare, and it's a fixed amount, which means irrespective of changing airfares, UDF will remain the same. Earlier, this fee was mostly charged only to passengers for outbound flights. But in the recent years, airports are not only increasing UDF, but have also changed the model how they collect this fee. Let's look at Navi Mumbai Airport, which is expected to open later this year. Here, passengers' airfare for domestic outbound flights will include a 620 rupees UDF, while international travellers will pay a whopping 1225 rupees more in their airfare as UDF. For passengers arriving at Navi Mumbai, they will pay 270 rupees for domestic flights and 525 for international flights. Now remember, Navi Mumbai Airport is run by Adani Airports, which also manages 7 other airports, including Mumbai, Jaipur, Ahmedabad, Guwahati, Lucknow, Thiruvananthapuram and Mangaluru. The fee structure adopted by Navi Mumbai was a trend started by Mangaluru Airport. So in 2023, the airport segregated UDF for departing and arriving passengers. So 2 UDFs here. You will see that UDF for outbound passengers is 735 and 315 for arriving passengers. Then early this year, Delhi Airport, operated by GMR Group, brought more changes to UDF collection, making international travellers pay more based on whether they are flying economy or business class. So international economy passengers at Delhi Airport pay 650 rupees on departure and 275 rupees on arrival. Business class passengers meanwhile pay higher fees like 810 when leaving Delhi and 345 when arriving in Delhi. Mumbai International Airport followed suit what Delhi Airport did by adopting the same model, charging international passengers more based on business and economy class. So what airports are doing now is charging arriving passengers and, more importantly, charging international travelers more, especially the business class travelers. They say this helps them raise money to build and upgrade airport facilities. So passengers should brace for higher airfares as more airports are likely to increase their user development fee going ahead.
All right, Madhiha, many thanks for joining us. Now, the black box of the Air India Boeing aircraft, which crashed in Ahmedabad, is in India. Aviation Minister Mohan Naidu said the black box is being examined by the Aircraft Accident Investigation Bureau. The air crash left 275 people dead, including 241 passengers and crew members. This comment from the minister clarifies reports suggesting that the black box was being sent to the US for examination. Aviation watchdog DGCA has flagged safety violations after surveilling at major airports, including Delhi and Mumbai. Now, the DGCA has found that flight simulators that pilots train on have not been updated and do not match aircraft configuration. The surveillance report also highlighted that flights were delayed due to worn-out tires. The regulator also raised concerns that aircraft maintenance engineers did not rectify snags across multiple airports. Up next on India Business Hour, pharma major Novo Nordisk launches its weight loss drug Wegovy in India. Prices start at more than 17,000 rupees for a one-month course. That and more when we return. And you can catch all of CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Well, train travel in India is set to get more expensive. Sources say passenger fares are set to increase across the board from the 1st of July. A formal order is expected this week. Shivani explains the possible hike in fares and the rationale behind the same. Shivani.
Well, yes, for the first time in several years, the Indian Railways is moving to hike passenger fares. That's what the sources are telling us, and the change could kick in from July 1st. Sources tell CNBC TV 18 that the proposal has already been moved by the Railway Board and a formal order is expected in this week itself. Here's what is changing with this new proposal. For non-AC mail and express trains, the fare could rise by 1 paise per kilometer, and for AC classes, the increase could be 2 paise per kilometer. This is what the Railway Board has moved. While the hike may seem minor on paper, it will translate into higher ticket prices, especially on long distance routes for Indian travelers. Now, take the Delhi to Mumbai route, for example. That's about 1400 odd kilometers. This fare hike means a sleeper class ticket will cost around 14 rupees more to Indian travelers now, and an AC third tier ticket will cost nearly 28 to probably 30 rupees more on this particular route. On even longer journeys like Delhi to Bangalore, a passenger in AC class may end up paying rupees 46 more on each ticket. For a family of 4 traveling during, say for example, peak season or festivals, the hike could add up to 100 to 200 rupees more per trip, depending on the route, the distance of course, and the class of train that they are taking. The fare revision is also expected to boost railway revenues marginally without imposing a heavy burden on passengers. That's what railway officials and sources in the Railway Ministry are telling us. Importantly, this hike does not apply to local and suburban trains. That's what sources are telling us at the moment, which means daily commuters in cities like Mumbai, Chennai and Kolkata will not be impacted by this decision. The Railways last increased base passenger fare in January of 2020 before the pandemic hit. Since then, fares have remained unchanged even as the operational costs have risen sharply. Back to you.
All right, Shivani, we'll wait for the official confirmation. Appreciate you joining us. Danish drug maker Novo Nordisk has launched its weight loss drug Wegovy in India. The drug is currently under distribution and will be available in pharmacies by the end of June. Now, a 4-week prescription of the lowest dose of Wegovy will cost over 17,000 rupees, so it's not cheap. Consumers will have to pay around 26,000 rupees for the highest dose. This is almost twice the price of Eli Lilly's weight loss drug Mounjaro, which was launched in March this year. Wegovy and Mounjaro are the only weight loss drugs available in India currently. Speaking to CNBC TV 18, Novo Nordisk India MD Vikrant Shrotriya said they are importing Wegovy to India and there are no plans to manufacture the drug locally as things currently stand.
Right now, we don't have plans for any local manufacturing. We have actually invested more than $20 billion in terms of APIs as well as fill and finish. And I think we have economy of scale to really produce for the world. And we will be currently importing it from headquarters.
Software major Salesforce has unveiled a significant update to its AI agent platform. Speaking to me at the company's headquarters in San Francisco, Agentforce CEO said that the platform has already crossed $100 million in annual recurring revenue. This makes it the fastest growing product in the company's history. Take a look.
We're really seeing activity and momentum from customers across the board. We have thousands of customers today that are playing with Agentforce. Agentforce as a business reached $100 million in ARR, which was the fastest growing product that Salesforce has ever had. And we have customers that are really pushing the adoption, pushing the technology at all kinds of stages of maturity. We have a great customer in the US, OpenTable, that you might be familiar with. Yeah. And OpenTable really started with starting to use these agents in the B2B side of their business, so facing their restaurants, and now has moved it to face their diners as kind of an end-to-end customer lifecycle. And so seeing some really significant adoption, momentum, growth with businesses like that. We see customers really experimenting in a couple of different patterns. We see customers that are adopting this for their full customer-facing lifecycle, marketing, sales, customer service. And then we also see a lot of activity on how do we augment, how do we drive productivity, how do we drive efficiency with our employees. And so Agentforce is really built to satisfy all of these broad sets of use cases, and we're really seeing some pretty deep adoption and motivation for customers to try to build better experiences.
So as the momentum picks up and perhaps accelerates as well, what could this 100 million ARR look in a few years? I mean, what's the aspiration, what's the ambition that you have, the headroom for growth?
Yeah, I think when you think about the scope of the digital workforce, that is an incredibly large business. That is really, we're talking about the global enterprise. What we are really laser focused on right now is obsessing about customer success at every step of the way. That is the most important thing to spend time on. This category was created in the last 6 to 8 months. A brand new category by which we believe workforces will evolve. And so what really matters at the moment is how do we ensure customers are driving to the right outcomes? How can they do that in a trusted, safe way? How can they make sure that they have the right data, the right business process that's genuinely going to drive those outcomes? And so we're just really obsessed with that right now, and we believe that is really the critical path to unlocking the full potential of this technology for our customers.
And you can catch that conversation with Agentforce CEO Madhav Thattai on our special edition of Voices from the Valley at 9:30 p.m. right here on CNBC TV 18. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. The news will continue right here on CNBC TV 18. There's plenty more to look out for from all of us here. For now, thanks very much for watching.